Hi everyone, my name is Peter Pikalski. Today we'll continue with creation of a financial model of an apartment complex, and today we'll be talking about fixed costs. Um, what is interesting about fixed costs? By the way, if you find this video valuable, you may give us a like, subscribe, share this video. Also, you can order a financial model from scratch for your unique business idea. Um, what is interesting about fixed costs? Even if they are called fixed costs, they may have some seasonality. And we have to create the algorithm for seasonal fixed costs, because in winter we have one fixed cost items, fixed expenses. In spring we have another fixed expenses. In summer we have another fixed expenses. So we have to create specific algorithm for the fixed costs. So we will start with create the algorithm for the typical year. Like this.
So here fixed costs,
Here we will place our fixed cost items. So the inputs color them with blue.
blue
The color for our inputs.
so these
These are the inputs. These are the inputs. When we just want some new scenario, we just work with only with blue cells. So this is the typical year.
And for example, these costs we only have
In winter, for example. These items, fixed cost items, we have only in spring. These items we have in summer. And these fixed cost items, for example, we have in autumn. Also, some fixed cost items may have some specific algorithm. You may, for example, let's increase the amount of lines, and I will show you some other examples. So we may face some situations when some fixed cost items are paid once in quarter, for example. 1 2 3 1 2 3 1 2 3 1 2 3. Other fixed cost items may be paid once half a year. 1 2 3 4 5 6 1, 2, 3. Some of them may be paid just once a year, for example, in June, for example. Some of them may have some specific algorithm like this, and one payment, for example, here, like this. Some of them may have some constant values like this. So despite of their being called fixed cost, they may also have some seasonal algorithms, or they may not have some seasonal algorithm, but inside the typical year they will have some fixed constant pattern, and we have to describe this pattern in this block of inputs. So what we're doing next, now we have to put all these expenses inside the timeline. So we will create a table for that. Fixed costs stage 1. So this will be some preliminary stage. So here I will place all the items.
Then I will place the typical year.
The values from the typical year. Then I will extrapolate these values to the right, to the whole of our timeline. And our next action will be
the values of fixed costs and starting them from the moment when we start the operating activity.
Stage for fixed costs, $1 per month. $1 per month. So I will take these values and multiply it on the line where we have 0 when we don't have operating activity and 1 when we do have an operating activity. This is this one. So 0 means that we don't have fixed expenses at this moment, and 1 means that we do have expenses because we have an operating activity starting from June 2024. So here we have June 2024. So I'm just linking the fixed expense to this line, freezing it. Now I will extrapolate this formula to the bottom and to the right. Now we have our fixed costs calculated. We will mark these lines with red because they will go to the cash flow statement. And in June 2024, we have our fixed costs starting with all their seasonality. So I hope you enjoyed this video. If this video was valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your unique business idea. We can help you with that. So see you next videos. Thank you and bye.